we're going to have a look at the wider restaurant and F&B sector in the UAE. Now, I'm delighted to welcome to the stage Vikrant from KPMG, and he's going to take you through and give you an overview of what's happening in the UAE sector before we dive into the hotel F&B specifically. Thank you very much.
Good morning, ladies and gentlemen. I'm Vikrant Rohatgi. I'm a director with KPMG's advisory practice. I head the strategy consulting for KPMG and have been working on helping companies with their future plans, go-to-market, and strategy. Have worked across a range of sectors, but F&B is of keen interest to me, both professionally and personally. I'm delighted to be here with you, and it's glad to see some familiar faces today here. F&B has been a sector of focus for us at KPMG, and we've been doing this. I would be sharing findings from our 2018 UAE F&B report today with you. This is the 4th edition of our annual series, where we look at the entire industry, the food and beverage industry, restaurant space, to see what's happening in the industry, what are the trends, what are the challenges and opportunities within the sector. Every year we've endeavored to enhance our report to make it more relevant and useful for the operators, for the industry. This year particularly, in 2018, we expanded the coverage of the format level financial and operational benchmarks. We've also looked at the impact of the expected impact of Expo 2020 on the F&B industry, and provided a perspective on the cost of doing business, which is, as you would appreciate, a hot topic within the sector. So with that, let's look at some of the key findings from the report. I guess everyone appreciates that UAE is one of the world's leading F&B markets today. According to a MasterCard study done recently, Dubai, which is at the epicenter of the UAE F&B scene, is globally ranked 4th in terms of international overnight visitors. It's behind Bangkok, London, and Paris. But I think more importantly, and this is where you see this, it has the highest average spend per day for overnight visitors, which is quite significant compared to some of the other top destinations. Looking at the F&B footprint, there are close to 3,000 restaurants per million residents in Dubai, which is second only to Paris and at par with New York. When you consider residents as well as overnight visitors, Dubai has more restaurants per million than New York. So this high international visitors, highest average spend, and strong restaurant footprints for Dubai kind of underlines its UAE's position as a leading F&B destination. And international and regional brands continue to look at UAE as a market to be present in. In fact, just sharing an interesting anecdote from this. When we did our first report, which was back in 2015, it was purely a consumer-based consumer insight that we had. And one of the things we had asked the consumers is, which are the brands from elsewhere in the world that you miss in UAE? Right? And we had drawn up a list of about 25, 30 brands which were mentioned. I can tell you, I mean, over the years, we've been striking off the names which have already entered into UAE. Today, we are down to 50% of that list. So that tells you that international brands and regional brands are looking at UAE quite favorably, and this will only increase competition in the market. So while UAE continues to maintain its prominence, 2018 was by and large a very challenging year for most operators. Over 70% of the operators had witnessed like-for-like sales decline during 2018. And out of the 70%, 40% of the operators actually saw a double-digit decline in like-for-like sales. And this is coming on the back of two equally challenging years, 2016 and 17. But on the other side, there are 29% of the operators who've actually been able to maintain or grow like-for-like store sales, which says that at least some are getting the formula right. And that's something to sort of ponder on. But there are a few trends which kind of explains why operators have struggled to achieve growth. And the first trend really is around the demographic shift that's happening in the market today. So again, we've looked at Dubai-specific data, as that was the data that was available through Dubai Tourism. When we look at 2014 versus 2017, what you see is the growth in tourism is being driven by Asian tourists, primarily India and China. And these tourists, fair to say, usually tend to be value-seeking, and they have a preference for home country cuisine. On the other hand, tourist arrivals from GCC and Western markets, which have historically been higher spenders, has not seen any significant growth. Similarly, while there's no official statistics around it, we understand there is a similar demographic shift that's happening in the makeup of the resident population as well. So this demographic shift is resulting in perhaps lower discretionary spend from the consumers. And there are other macroeconomic factors as well that impacts this, right? Volatility of oil price, a stronger US dollar, which makes UAE more expensive for tourists, at least for a good part of the world. Modest GDP growth seen in the country. This has all resulted in subdued consumer sentiment and hence affecting the discretionary spend. The other factor to look at is the demand-supply dynamics. The supply indicators have shown stronger growth or are expected to show stronger growth versus the demand indicators. And while we have used retail supply as the supply indicator, I'm sure some of this would resonate on the hotels, your experiences on the hotel side as well. But essentially, you see 4.8% expected growth for the demand, which is really the increase in population and tourism, and 8.7 in terms of the supply. And particularly from retail perspective, F&B is playing an increasingly important role within the new retail development and is expected to continue to do so. So the question here is it really a challenge or an opportunity? The way we see this is, yes, it will create an increased competition in the short run, but particularly for F&B operators, this will eventually, in the medium to longer term, it will result in softening and rationalization of rent, something that might not affect the business on the hotel side, but at least for the operators who are outside of the hotels, that's a big cost. So these trends would mean that market will continue to remain challenging. When we asked the operators about how they look at the near term, it was a divided house when it comes to the outlook for 2019. It's pretty much an equal spread if you see, a third across the three buckets of decline, growth, and status quo. It's fair to say some of the challenges which exist today will not go away in the near term, right? But with more agile operation, some businesses are better prepared for the headwinds today than they were in the past. And cost optimization today is the mantra for the F&B sector. But that said, when we look at the medium-term outlook, which is beyond a year or two, the medium-term outlook for the sector is still positive. over 8 out of 10 operators see some growth coming back beyond 2019. It's perhaps time for operators to take a hard look at their portfolio and the business model. And some of this is already happening. So one of the things we've asked operators over the years is, which is the top area of investment for you for the coming year or for the current year? In 2017, we were told it's really the expansion into new markets and new geographies. In 2018, everyone is talking more about operational improvement, brand refreshes, setting the house in order. And that's really the top agenda, top of mind for operators today. In terms of the medium-term outlook, the optimism is primarily driven by the promise that Expo 2020 Dubai holds. And it's a huge event. There are nearly 2 billion dirhams of F&B sales expected during the 6 months. At its peak, they are going to be serving 85,000 meals per hour. Some really astounding numbers. So it's not surprising that 75% of the operators see a favorable impact of the Expo 2020 event on the industry. But more importantly, 3 out of 5 operators that we spoke to expect Expo 2020 to impact their own business favorably. And many operators have already started to plan for the Expo 2020. In fact, 35% of the operators we spoke to said that they are looking to directly participate. And I'm sure these numbers are going to only increase as we move closer to the dates. But all in all, 2020 will be the year when F&B industry could be expected to switch gears. That's a view based on what we've seen. Now, moving on and talking about some of the other trends that we've seen in the industry. So, in terms of the most pressing concerns for the F&B operators today, clearly, declining sales is a big worry, and so is the increased competition. But geopolitical situation and geopolitical factors is now emerging out to be an important concern. In fact, as big a concern as declining sales for operators. So given the geopolitical developments over the past few years in the region, operators, it is affecting consumer sentiment, and that in turn is affecting business for F&B, and everyone is kind of taking a keen note of that. Talking about some of the interesting trends that we've come across around cuisines and formats. Of course, the top preference for cuisine has remained largely similar over the years. So Arabic, Indian, Italian, which is kind of reflective of the demographics of the market today, continue to do well and are the top preferences. Asian flavors are expanding, and Emirati cuisine is getting noticed. There are more and more concepts coming in there. Operators are now looking to go beyond the traditional Asian choices of Japanese, Thai, Chinese, and looking at other cuisines that can be introduced to the market. When it comes to healthy eating, it's a tale of two halves. While UAE consumers love eating the fried food and sugar-based offering, I think what we've seen and what we've heard is veganism and vegetarianism is on a rise. It's gradual, but it is certainly happening in a noticeable manner. Also, a number of operators told us that delivery-friendly food is expected to grow and will do well in the market. So that's another thing to sort of take a note on. Talking about formats, given the situation in the market, given a more value-seeking consumer today, QSR and fast foods have benefited from this trend and are doing well. Cafe space is kind of a little overcrowded, but still international chains and established brands do well in the market. It's really casual dining that seems to have been the most impacted in 2018. And this has been as an effect of the downtrade from the consumer who are looking for more value for their money. And this has led to drop in footfalls as well as the average ticket size. for the casual dining format. Premium dining is also being impacted. I'm sure it kind of resonates with some of your experiences here. But certain popular premium dining brands have managed to buck the trend on the back of their steady patronage. But even for those, the average ticket sizes have seen a decline. So let's look at some of the numbers behind these formats, right? So one of the things that we've been doing over the last couple of years is, and with great support from the industry, is to gather some financial and operational data from various operators and kind of bring it together to see what trends emerge from those. So what we've done is we've separated it out into QSR and fast casual, cafes, casual dining, premium dining with and without alcohol. So in terms of two of the largest costs, and some of you would be thinking, why is there rentals there? But yes, for a lot of F&B business, rentals are important. So food cost and rentals are two of the most important operating costs for the business. And food cost, as you would appreciate, is largely variable in nature and has a direct bearing on the margins. And within the food cost, beverages tend to have a lower cost, and hence, you see that cafes typically have the lowest food cost. Rentals, on the other hand, are relatively fixed, and compared to 2017, what we've seen is rental as a percentage of revenue have either remained fixed or have, as in unchanged, or have actually increased. And this is a big pain point for a number of operators. And these costs would impact the operating margin. And what we've seen is, compared to 2017, we are seeing a wider range, which is demonstrating the sort of wider range of performance for F&B across across all the formats. But particularly within casual and premium dining, we are seeing a much wider range today in terms of margins. And with the ongoing efforts, a lot of operators have managed to achieve stable margins, not the same as last year, but still stable. But that said, many outlets and many brands have struggled to achieve positive margin. So at the brand and the outlet level, they are loss makers, clearly, particularly when corporate overheads are allocated to the brands. So that, they are brands and outlets. I'm sure, again, this is no surprise, which are in the red. So this year, we also looked at some of the operational metrics around revenue per staff, revenue per square foot. When we look at revenue per square foot, QSRs and premium dining generate relatively higher revenue per square foot for obvious differing reasons. One due to the volumes, the other due to the average ticket size, higher ticket size. We have also seen some really superlative performance at par with premium dining within the casual dining space. And they are players who are really being able to drive their top line really well. Cafes, on the other hand, have better revenue per staff compared to the other formats. Again, lesser number of staff, and hence your revenue per staff tends to be higher for the cafe segment. Moving on and talking about, and this is the last part of our presentation, really talking about delivery and how that has been impacting the market. With the headwinds faced by the industry, I think delivery is one of the bright spots within the UAE F&B scene today. Most operators see reasonable volume. You see 68% operators said that they see reasonable volumes from delivery. But interestingly, and this is more important as well, the share of business coming from the delivery channel has been increasing for the operators. So for 31%, and this is really these two, 31% of the operators see more than a quarter of their revenue coming through the delivery channel today. This number used to be 21% last year. And 63% of the operators are seeing more than 10% of their revenue coming from delivery channel. And this number was 43% last year. So there's been a significant jump on both the counts, which kind of underlines the importance of delivery today for the F&B businesses. And linked to that is the emerging trend around delivery and rental kitchens. 85% of the operators we spoke to see this trend catching up and becoming more prominent in the coming years. 50% of the operators said that they are either already present or are actively looking to have a presence through a delivery kitchen for various brands that they have. And another 25% will be interested in exploring delivery kitchens in the future. So overall, delivery and delivery kitchens is an important trend to watch out for, and more importantly, to plan for as businesses continue to see growth and profitability. With that, we come to the close on our presentation, and I would like to leave you, as would be apt for a F&B presentation, with 5 key takeaways. The market today is challenging with increased competition and subdued consumer sentiment. While the near-term outlook is mixed, I think the long-term outlook continues to be robust. QSRs have outperformed the other formats, and casual and premium dining, to some extent, have been impacted in 2018. Setting the house in order is really a priority for the operators today, who are looking to achieve better operational efficiency and to optimize their portfolio. Deliverusion is the mantra. Delivery is going to make further inroads and is the story to look at for the future and to plan for. And Expo 2020 is expected to provide a boost to the F&B sector, and many operators are already planning for it. With that, we come to the close of our presentation, and I'm happy to take any questions you guys might have.
Thank you very much. Does anyone have any questions? We have time for one question, I believe. It's a bit dark out there. I can't see anything. So I think that's it. Thank you so much.
Great.
Really appreciate it.
Thank you.
Cheers.
Thank you, everyone.
And so some very interesting facts and figures there. The next presenters have actually got an exclusive research report they've put together for you guys here today. And they've taken sentiments from the operators and the owner side about what they're seeing on the market. So without further ado, I will introduce you to Helen and Stefan from Keen. And now Keen are designers, strategists, and above all, they are thinkers. So I will hand you over to Stefan and Helen. Thank you so much.